We return to our main story. The U.S.-Israel conflict with Iran is now in its second month, and there is rising scrutiny over how much the United States is spending on the war. The Trump administration has recently indicated that it may request additional funding, while lawmakers and analysts are increasingly calling for clearer transparency on the total cost of the operation. According to our analysis editor Roz Atkins, the financial burden is already significant. In briefings to lawmakers, it was revealed that the first 6 days of the conflict alone cost about $11.3 billion. Early in the operation, hundreds of Tomahawk missiles were reportedly deployed, each estimated to cost around $3.5 million. However, as Iran's defensive capabilities have been weakened, some experts believe the U.S. has shifted toward using less expensive munitions in certain operations.
At the same time, Washington claims that Iranian attacks have significantly decreased in intensity. Independent assessments appear to support this view, suggesting fewer countermeasures are now required, which may be reducing operational costs. While the Pentagon has not released detailed official figures, analysts can estimate spending using known military activity and weapons pricing. The Center for Strategic and International Studies, a respected Washington-based think tank, calculates that by around day 12 of the war, the conflict was costing roughly $385 million per day. Even though exact totals remain unclear, the scale of spending is attracting attention. However, some argue that this level of expenditure is not unusual for the United States, given its historically large defense budget, which is close to $1 trillion annually and broadly consistent with previous administrations. To put this into context, earlier U.S. conflicts were also extremely expensive. The 2003 invasion of Iraq, when adjusted for today's value, is estimated to have cost around $57 billion in its early stages. The Afghanistan War, launched in 2001, saw costs escalate significantly, reaching its most expensive annual point by 2012 at approximately $131 billion in today's terms. By comparison, the current war with Iran may have already exceeded $20 billion within its first month. A former official from the George W. Bush administration told the BBC that the early phase of this conflict appears to involve a spending rate higher than both Iraq and Afghanistan. Unlike earlier wars, this conflict does not involve large numbers of ground troops. Instead, it relies heavily on naval fleets positioned offshore, which are extremely costly to deploy and maintain, along with the continuous use of advanced missiles and weapon systems that must constantly be replaced. As a result, the Pentagon is now reportedly seeking up to $200 billion in additional funding. Defense Secretary Pete Hegseth has defended the spending, stating that it takes money to eliminate threats. However, as costs continue to rise, President Trump may face growing pressure to justify the expenditure to both lawmakers and the public. The war has also triggered significant disruption in global oil markets, with stock exchanges reflecting growing uncertainty about how long the conflict may continue. Speaking on the issue, Asia business correspondent Nick Marsh explained that rising oil prices affect almost every sector of the economy. When oil becomes more expensive, production, transportation, and even air travel costs increase. This, in turn, feeds into broader inflation, affecting everything from food imports to fertilizers used in agriculture. Key supply routes such as the Strait of Hormuz are especially critical, as a large portion of global energy shipments pass through this region. Any disruption there directly impacts fuel availability and pricing worldwide. At present, benchmark crude prices are experiencing sharp volatility. Although futures markets have shown fluctuations, real-time spot prices for oil have surged dramatically. Some reports suggest levels reaching around $140 per barrel, the highest seen since 2008, and even above spikes recorded after Russia's invasion of Ukraine. Market movements are also closely tied to political statements, particularly those from the U.S. president, which traders interpret as signals about whether the conflict may escalate or de-escalate. However, recent uncertainty has led many to believe that the disruption could continue for an extended period. Even if military operations were to slow or stop, analysts warn that reopening critical maritime routes such as the Strait of Hormuz would not be immediate. The area is effectively under Iranian influence, and restoring full shipping access could take weeks or even longer, likely requiring diplomatic negotiations. Energy analysts also note a widening gap between futures prices and actual spot market transactions. While official benchmarks reflect future contracts, immediate oil purchases in the market are reportedly trading at much higher levels. The economic pressure is already being felt internationally. In Pakistan, the government has responded by sharply increasing fuel prices, raising petrol by 43% and high-speed diesel by 55% overnight. Officials say these changes are a direct consequence of rising global oil prices linked to the conflict and uncertainty over supply routes. Authorities in Pakistan also acknowledged that the country relies heavily on imported oil, much of which passes through the Strait of Hormuz. As a result, domestic fuel costs have surged dramatically over the course of the conflict, with petrol prices now significantly higher than before the war began. Officials warn that this will likely contribute to inflation, affecting transport costs, food prices, and overall economic stability. While some tax adjustments have been introduced in an attempt to manage the burden, the government says its options remain limited due to constrained financial reserves. Economists also stress that many countries are now trying to balance short-term fuel needs with long-term uncertainty, as no clear timeline exists for the end of the conflict or stabilization of global oil markets. In other major developments, U.S. President Donald Trump has dismissed Attorney General Pam Bondi just hours after publicly stating that she was performing well in her role. In a statement posted on Truth Social, the president said that Bondi would be moving on to a position in the private sector, adding that she had served with distinction. Bondi herself described her time leading the Justice Department as a major honor and said she had played a central role in what she called a historic and highly effective effort to improve national security. However, her tenure was also marked by controversy. She faced criticism over the handling of sensitive documents connected to the late convicted sex offender Jeffrey Epstein, particularly regarding concerns that some victim identities were not properly redacted during the release process. The decision to remove her from office comes amid ongoing political scrutiny and debate over how certain high-profile legal matters have been managed within the administration.